Hey, I'm Oren Klaff. This is the Game of Money podcast, and I'm here with Nate Woodman. Nate was employee number 1, which I give him a lot of credit for here at OK Stone Engineering, the company that we're going to talk about today. And I think this is really important to recognize him for. He was also employee number 2.
Yeah, I was going to say
3, 5, and 11.
Yep. I'm still number 1.
They're still number 1,
Yeah.
but you're also number 11 in my mind.
Yep.
We've been at this. I've been at this for 4 years. Nate's been at this for a good amount of time here. And we are really getting ready to cross some huge milestones. So our equipment shipped from Italy. And so if you're new here and you're like, equipment, what did you order from Italy? Okay, did you order a coffee machine? Did you order a license plate
What about
printer?
a new car?
A new car? Yeah. No, we ordered a $9 million thing that creates 1,200-pound things that are countertops. A new way of engineering countertops from the Italian company. It's this massive thing. It takes a football field. In the facility where they make it, it's a football field long. So these giant 1,200-pound slabs come on. They get heated. They get primered. They get positioned. They get 3D manufactured into actual stone countertops, and it goes off to the most beautiful mansions and houses you've ever seen. And we benefit from it. Most benefits from this is that all the investors we've had along the way. How many investors so far?
Probably about 250.
250 investors. Yeah. So what's interesting is a lot of people think, hey, I invested in a company. When did you invest in the company? So if you invested in Tesla or if you bought in the public market, like you might have liked to have been the person who invested in Tesla on day one, because now Tesla's whatever, $680 billion market cap, when it was what do you think Tesla's first valuation was?
Couple $100 million.
What was that? The first valuation was at the IPO was $17.
Yeah. Yep.
I'm guessing you started raising money for that thing at $150 million valuation. So you could have bought into Tesla at $150 million.
In May 2010, Tesla announced a partnership with Toyota, which agreed to buy $50 million in Tesla common stock in a private placement. Musk initially invested $6.35 million for about 16% of Tesla in 2004.
For how much?
16%.
16?
Yeah.
Interesting.
And that's in 2004 because Musk wasn't the original founder.
That's right. So he put in
$6.35 million.
6.35 for 16%.
Yeah, $6 million for 16%.
And so the valuation there would have been an 8, so 50 million? 50 million bucks.
Yeah.
So what's Tesla today?
40 million. 40 million.
Right, but you could have bought into that thing at the ripe old price of $40 million. So we have investors who bought in here at 50 million.
Yeah, market cap $700 billion.
700 billion. And somebody bought it. Elon Musk bought in at 40 million instead of 700 billion. How do you like that? So there's dilution along the way and some things happened and he got some more stock. But again, we have investors who bought into this company here at 50 million. Today we're moving up through a $200 million valuation. And remember, that's been 10 or 15 years that Tesla's been at it. What was it, 2004?
2004.
Yeah, so 20 years.
20 years.
Yeah, so we've been at it 9 months.
Yeah, with an empty factory.
But the interesting thing is we're getting ready to move into revenue, and that is going to release the hounds. Nate and I have been raising capital for the deal at a $75, $100, and now $200 million valuation with no revenue. So planning, setting up, getting buildings, hiring teams, building equipment in Italy, overseas, hiring teams overseas, but no revenue. So all the investors came in, they all want this proof. Like, hey, I don't want to see an empty warehouse. And we're like, oh, you don't want to see an empty warehouse? How about no warehouse? Yeah. We don't even have a building. By the way, our manufacturing facility is not a warehouse. I just call it a warehouse right now because it's giant and it's empty.
And you can store anything there.
Store anything there. But it is a manufacturing facility. And yeah, so they want to come, they want to visit a manufacturing facility, not the idea of having a manufacturing facility. And then we had the manufacturing facility, but didn't have any equipment in it. So then, of course, they wanted to see the equipment in it. All right. So now the equipment's on the way, and they go, okay, I get the equipment's going to be in the building, but now I want to see it running. Right. So the equipment's going to be running, call it December, January, pushing out raw material. Right. And then people are going to say, hey, I want to see revenues growing. No problem. You can see anything you want. Right. You can wait until Microsoft acquires.
Yeah, and then they're going to want your top 10 client list.
Right. You can want whatever you want, but time moves on, and so you miss. So you got to decide what's your appetite for risk reduction. So, of course, you get a building that reduces your risk. You have a management team that's on the ground and executing, it reduces your risk. You see the equipment running, reduces your risk. Customers buying it, reduces your risk. But so the trick is like, where do I jump in to a deal where I feel like I'm comfortable with the risk? And so you've seen And we both have, you've seen people invest $1 million. You've seen people invest $10,000, right? And I feel like the amount doesn't really matter. It's where they're...
Yeah, it's what's inside
It's inside their own risk reward threshold. So somebody has $10,000, right? And it represents a fifth of their $50,000 investment portfolio.
Yeah.
The risk reward is as important to them as somebody with putting in $1 million that has $10 million in their portfolio.
It's all about their bankroll, what their units are. And I tell them too, no one knows how much they invested really except me and you on most of it, but nobody knows within the community between each other. I'm like, we don't unit shame. Whatever your units of risk are and you're coming in, that's what we're doing together. And it sends a big message to these people around, hey, just because my 10,000 means the same much as someone's $1 million to their 10 million does, we'll take you the same.
Because we don't unit shame, I do feel bad sometimes because somebody put in like $1 million and has $50 million in a portfolio, I want to be nice, but talking to someone who has $12,000 in and they're not at the same level, but they assume because they're in the deal that they're at the same level.
And it carries the same amount of risk to them.
Yeah.
Or it feels like it does.
Yeah.
And so when they have conversations, I'm protecting my fortress, even though it's smaller, the mighty sword, I am that warrior.
So as we move into revenue, it's just getting easier and easier to attract people to deals. So one thing you have to learn, I think, is in America, a pre-revenue company and a revenue company is the difference between night and day, black and white. Yeah, you could think about tech. What was Magic Leap? It was a pre-revenue company that raised, hundreds of millions of dollars at multi-billion valuations and never became anything. And that was the 3D visualization goggles. It never became the thing it was supposed to be, and they lost all. But outside of tech, really, there's a lot of pre-revenue in tech, but in real companies like manufacturing, onshoring, construction, development, like pre-revenue and revenue are...
It's a big jump.
Tech. It's a huge jump.
And because once there's revenue, if it's in the hard asset space, like it's just going crazy.
Yeah.
There's such a big difference. It's not like tech, hey, let's get 20 customers, 30 customers, let's get 50 recurring revenue customers.
Yeah.
It's either you're shipping stuff out at a 70% uptime or you got nothing.
So I think revenue in tech is a bit of a yawner. Oh, you got 15 customers paying you $100 a month for your grammar, education, software, whatever the thing, your security, routing software, whatever it is, but they could have just stumbled into it. In a thing like us, once you have revenue, because you have capability, right? So it's not the revenue is a signal that the capability has been turned on. It's like a power plant, right? Electricity is flowing. So if you were going to invest in a power plant, you're like, yeah, I want to invest. I'm either way early or when the electricity is flowing.
Yeah, show me those amp charts.
Show me the amp charts, and then, okay, electricity is flowing. There's no other way to do that without having a power plant. You can't fake electricity. Yeah. You can get beta customers in software, in medtech devices, but in what we're doing, if it's on and it works, and you have a unique manufacturing capability, then you go, okay, what's the market size? And it's very easy to overlay this manufacturing capability on that market size and go, holy crap, I got a multi-billion-dollar company here. Hopefully the management team can hold it together. Turning the corner on revenue is nothing. I think we're developing the thesis here when you're in tech, because you have not really developed a capability. You developed some software, which was fairly easy to build, fairly easy to roll out, fairly easy to test. It's like move fast, break stuff, blah, 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 Silicon Valley, right? But when you're building a capability and you prove that capability to work, and then you do a market overlay and the market's $60 billion, and you go, oh my God, this could actually walk into $2 billion of revenue, $250 million of income at a 15 or 20 trailing PE multiple. We could be sitting on a $50 billion asset here. Could be sitting on a $50 billion asset.
My only thought to that is in tech, especially, the proof of concept is easy because you can get 100 of your closest friends to use, to love it, to try it, to comment on it. It's hard to get 100 of your closest friends to buy 40,000 ultra jumbo energy engineered quartz countertops.
Yeah,
right?
People aren't going to buy it. You can't ask for, hey, do you mind? Hey, do you mind spending $40,000 to dismantle your kitchen?
Yeah.
Spend $15,000 on an architect, and then I don't know, just throw $40,000 or $50,000 at us for some super jumbo slabs, and then have a fabricator install it for 40 or 50. Hey, can you just throw $250,000 at this and spend 6 months of your life in disarray to just try out our new product?
And leave me a Google review.
Leave me a good Yelp Google review. So this is really a very serious concern. We're getting ready to turn on the equipment, manufacture the slabs, move into revenue, and Nate and I are stepping into a paint by numbers, feels to me, billion-dollar asset if we can get our material science right, which everything up to date has shown that we do have it. So how did this all happen? I made some notes here. As I was pulling this thing together, as you know from Pitch Anything, people email me every day. I see 5, 10 deals a day. Look at this. A lot of them are early stage, a lot of them startups. I see some big deals, real estate deals, construction deals, and I look at everything. And normally I just pick 1 or 2 deals a year to help raise the money, but I didn't get involved in any deal. So when I saw this, my protocol to own my own deal, number 1, go small. Saw the deal, and then I had to go into the details, get like super, super narrow, super focused, get reps. Is this technology real? Are these people real? Is this market real? Will people buy this? Is this defensible? Is the technology new to the market? How long will we have a technology moat? How much money does this take? Like, get super small, granular, go way deeper than deep. So number 1, go small. And then once you're small, go extreme. Go, okay, if I owned this technology and this capability, right, what would I have to, how much money would I have to raise? Could I raise the money? What would I do with the money? How fast would the money have to come in? What would we buy? Where will I get people from? Just go extreme and go, okay, I want to build since I went small, I really understand this at the nano level. And now it's go big and go, if I built the most extreme version of this, how big could it be? How big is the story? So go small and then go extreme and then say no. And at some point, I just had to start saying no to everything else. And that's hard when you're in like exciting business like this where you see deals every day, right? I see movies, I see med tech, I see crypto, I see real estate, I see space tourism, I see auto racing, I see Formula One, and you don't have to, in the business I'm in, you don't have to go into that deal. You just have to be affiliated with it or help them out, and you get all the benefits around being around F1 or being around aircraft, being around movie sets, being around that. So it's cool to hang out in those deals and just help them. And in order to say no to everything cool and just go, all right, we're just going to live in this building for 2 years and make it happen. So those were the rules, right? Go small, go extreme, and then at some point say no to everything else and do it for real. Build yourself a nice billion-dollar company in a couple of years, and then what's next? I don't know, you're going to need a satellite phone to find me, Iridium.
Off the grid.
Off the grid.
I think step 4 is we grind so hard so that we can grind to get off the grid.
Yeah, off the grid.
Yeah.
For sure. All right, that's the story of in RiskReward, getting into a deal, go small, go extreme, and then say no, and then go big. And this is a little bit about how investors think, how we think about investors, and if you're working on your own deal, these are the things to remember.
I got something to add. We can choose to keep it or not.
Okay.
But I had an investor late yesterday email me saying, hey, he's not interested on the deal yet.
Yeah.
He wants the B1. He wants to see the revenue. He wants to see the factories humming.
Yeah.
So all I said was, investor's name. Roger that. Please keep in touch. And then all I did was paste The Road Not Taken by Robert Frost poem. And then it ends with, I shall be telling this with a sigh. Somewhere ages and ages hence, 2 roads diverged in a wood, and I took the one less traveled. And that made all the difference. Leave it at that.
Nice. Yeah, leave it at that. I took the one less traveled. And here we are, getting ready to buy another factory. All right. Hey, this has been the Game of Money. Nate and I have been here to help you find your own way through it. This is sponsored by the book Pitch Anything. And by sponsored, it just means like it's my book and I pay for everything. So if you want another copy of Pitch Anything, go buy it. It's on Amazon. Very rewarding to see your orders come through. I don't see your name. So I'm like, hey, Mom, thanks for buying another book. Hey, Nate, I was feeling a little down today. Thanks for buying 500 books. So we see the orders come through. We don't know who you are, but Pitch Anything pays for all of this, podcast and media stuff. So buy another copy for your friend